Hi, this is Randy Finney with Right Side of the Chart, and this is an early session update for Friday, May 23rd, 2025. It is 10:11 a.m. Eastern Time. I'm starting the video, so we're about 40 minutes in the trading day. Here's what I'll do in this order. Following order, we'll do a quick update on the equity markets. We had our first price targets hit today on the short-term swing trade. Get to that one in a second. IWM also everything hitting support, bouncing where it should have bounced. How far we go, I'll speak to that in a second here. Uh, Maybe I'll touch on the VIX. Like I said, I said this to somebody yesterday. I asked for an update on the VIX. Nothing's changed. Long-term target's still T3. Short-term, we bounce off the trend line. Again, I'll get to that. But to be short the equity markets and bearish stocks at any point in time, it's to be bullish the VIX. It's just an inverse trade. It's just super leveraged, if you will. On a related note, SOXX, because that's the most important. To me, it's the canary in the coal mine for the tech sector, and tech is everything about the market. And then I want to do an update on crypto. Somebody asked, and I've been following and actually had planned to do an update on it either yesterday or today, so I'll get to that at the end, primarily Bitcoin. All right, so no change on the equity markets. We recently took out the trend lines, which coincided with also those short-term sell signals. The QQQ, well, there's QQQ, SPY, we know is below. Let me go to the 60-minute charts. I have the pre-market trades turned on. So almost a perfect hit at T1. If you're new to the site, I say this quite often, but it bears repeating because folks are always coming in. My price targets are always the actual support level that we're likely to get a reaction. And on short trades, I will always set and recommend or suggest to anybody to set your buy to cover limit orders slightly above it in case traders, like I often do, will step in early. So if you see 288 is the support level, you want to cover above, and that was and it's all relative to the price moves in the trade. But on QQQ, so today the low was 503.27. That's 50 cents on a 500-point security, so a mere fraction of 1%. And again, you can just look at it. So you'll always place your order. So that would certainly would have filled any orders. And also, I always say this, to me, the key to any trade is to make my price, hit my price targets and not be stopped out. As such, and I always have, recommend and praise the benefits of OCO orders. One cancels another, especially for those new to this, those of you that lack discipline, those of you that don't have the full-time capacity to sit in front of the computer all day like I do. An OCO order says when you take a trade, remember we shorted QQQ. This was the initial short entry. You can see here we were at 522.03, and I said my preference was to take the aggressive short entry in anticipation of the breakdown right there before it even broke down. So that was the initial entry, and of course with an alternative entry to come on to break the trend line. So 522, that was pretty much the highs. Here's 522 right there. So we picked the top on that one. And again, came within a mere fraction of 1%, mere basis points, literally. And so that's the typical reaction. I have the pre-market trades turned on. That's what you see. I think you can see it in the video. This is a shaded box. It's yesterday's after-hour trades. So we hit, now remember, I said we had to take out the 514.39 was the first support level after the breakdown back test. We danced along it all day yesterday and early this morning, and then boom. And as I often say too, again, if you're new to the site, if you're not new, you've heard this 1,000 times. I've always promised you the technicals and the fundamentals are married together. They're meshed together. So yes, there was an announced tweet out by Trump today, on his Truth Social about the tariffs and Apple and all that stuff. But make no mistake about it, I've done this a very long time. The chart's set up first. Sometimes there is no fundamental news catalyst, and then the bubble TV, CNBC, Bloomberg, that will pin, because that's their job, to try to pin an excuse on a rally or drop in the market, even if there is none. Sometimes it's absolutely ridiculous. Many times I've seen them take the same exact reason for a big drop in the market that just a week or two early they were citing for a rally, be it expectations or lesser chance of a rate cut or a greater chance or something else due to, a strong or a bad economic report. Again, it's comical how they can spin something just to, retrofit. I've never seen them come on TV and hold up their hands there and say, we have no idea why the Dow just dropped, 500 points today, or the Nasdaq went up 5%. They'll cite a reason, whatever it is, and sometimes it is the right reason. And so, again, my point is there was a fundamental catalyst, but it was already priced into the charts. Hit that first target. So the $1 million question: how far do we bounce? Somebody asked. I said, yeah, my preference is it's more of a hacky sack reaction. I expect, and this was in the comments this morning before the market opened, right after I got that post out to you. I said, expect little, if any, reaction. That's what I call, a reaction. Again, if you're new to the site, is what I define as when you're going down. A reaction can be in the form of one of two things or a combination thereof. And I use the analogy of hacky sack or a golf ball or tennis ball. You drop both on a concrete floor, tile floor. The hacky sack's going to hit the ground and stick. That's a reaction where the selling stops and it goes sideways for a while. That's a reaction in time. And a bounce would be the golf ball or the tennis ball, and that's a reaction in price. Or a combination thereof is when it's just a very muted, relatively small bounce, and then a little bit of time, and then you take it out. Regardless, support is support until unless broken. And that was a big gap. I would have, again, I said this before it even happened. I said, I think yesterday, I would be very surprised, not shocked, but very surprised not to see them come in and step in and buy the initial pullback of the gap. This is the biggest drop we've had in many weeks, if not months. And so the probability was near 100% that they were going to, at least a good amount of traders are going to buy that gap. It's just, again, it's so obvious a blind man could see it. So there's the gap. There's the reaction. $1 million question: how far do we go? What I can tell you definitively is that 514.40-ish level. When I put it up here before we even hit it, I had that level identified before the wedge even broke down. And so the fact that we danced on it, you haven't seen the market, move sideways this long for many months, further validated that support level that I had recognized before, based on the fact we had 1, 2, 3, 4, 5, 6, 7, 8, 9. Well, God, that was a little higher. 10, 11, 12, 13, 14, 15, 16, 17 consecutive candles test that 514.39. All I'm trying to say is that additionally validates the support level. The more reactions you have on it, the more valid it is. Why? Because the more eyes see it. My eyes saw it before, we did this. And then when we did that, now you can't argue. It'd be very hard to argue that that wasn't significant support. And once it went, and this is the way it works, the better defined a support or resistance level is. And my theory is the more I see it, the more important it is, the more you're going to have stop loss orders set above there. So when we finally got the rejection, as expected, it was a relatively swift drop down to T1. If you blinked, you missed it. If you weren't already short, you missed it because it happened in pre-market. And that's it. So in the $1 million question, how far we go? Well, I already shared my thoughts. I think the bounce would be minimal. And where I was going with this whole thing, support once broken becomes resistance. So should we bounce? Should it be more than just a little muted, short-term bounce and a drop there, which is still what I'm leaning towards? That would be a very objective entry right there, anywhere. And again, do you want to wait till 514.39? No, you want to start shorting. And you can see there's some reactions below. A lot of eyes are going to see that level. So if we get anywhere near it, that's probably where you're going to get the, the day traders that bought the pullback to test the top of the gap. That would be a logical short-term day trading op. Also, keep in mind, guys, and this factors into my analysis, we have a 3-day weekend coming up. So one extra day of overnight risk there, and therefore that's going to put a lot of folks thinking, okay, Trump's back on. He cowed down. Remember, the day of the lows, and right there, and a couple days leading up, I, continually stated my preference to stop shorting, no more shorts, going long, only longs. And I also predicted that, there would be progress made, and it was imminent in the trade war, and it did. And I also made note that day, it was right around a couple day or two after the lows. I said, I think the Illuminati marched Trump into a dark, deep room down in the bowels below the White House where all those tunnels are, and sat his ass down in a chair and checked his ego, because he went from full blown big talk on trade on the tariffs to pulling a 180 and cowing down like you hadn't seen. So the man with the biggest ego in the world got checked. And he also, on that same day, right around the same time, completely pulled a 1.8 on Powell. He was talking like a 7th grader, talking a lot of smack about Powell. You probably read the tweet. Came back in and said, oh no, Powell's doing a great job. I'm not going to fire him. Like I said, his ass got checked. But, a tiger can't change his stripes, right? It's the old scorpion and frog thing. And he is a scorpion, and that's in his nature. So he's back to his usual ways, trying to, huff his little ego up because he got his, his big bloated bill past the House. By the way, somebody asked about the solar stocks. I'll look at those when I get a minute. It's, this thing still has to clear the Senate, and I think that's not supposed to happen until July. And it's going to have, the only guarantee it's going to have a lot of iterations and changes before it goes to the Senate, and so it's not going to get passed in its current version. So my reply on that is, I'm not be careful about trading in sectors like the solars that are really getting swayed and can and will, depending on which way that bill goes. The bill's going to get passed. It's filibuster proof. Senate has majority, but it's going to not be passed in its current form. That's about the only guarantee. So trade the charts, not the news. That's what I say, and I'll look at the solars when I get a chance. So there it is, guys. There's your levels to watch. Likely max bounce target today, although I suspect we won't get all the way there. But if we do, look, it's an objective level, potential downtrend line to come in. 3-day weekend. We know there's a lot more longs than shorts in the market right now. I think that's a pretty obvious statement to make. So therefore, you're probably going to have more folks that probably want to take profits on long positions before the weekend today than short. However, I'm going to show you a couple things here, and then I'll move on and we'll get to those other things I covered. The one thing I don't like right now for the potential, remember, this is just a short-term swing trade. You already hit the first target. Fine, take profits if you want. Recycle back in. Like I said this morning, the trend line now will come in before we hit that price support level there, about 493.50. And so that is potential support, as is the 493.50 just below it, right? And then there's the potential, as arrows, that trend line can go. I'd still put pretty good odds at that. Probably not going to happen today before the weekend. It'll probably be next week if it does. But then those are levels to watch. And if you check the comments I made today, I'm still very, very open and still leaning towards those longer term price targets I have. It's just, where do we go in the near term? It's where, especially my active trading account, I'm not concerned about where we're going to be 6 months from now. I'm concerned we're going to be 6 hours from now. That's my primary trading account. All right. So what I do not like about I'm just going to give you the pros and cons, a possibility of this being the end of the bear market rally. Again, we're getting away from those 200s in a level that has certainly knocked down. I also comment on that. It really, brought down my odds the odds that the market topped back earlier this year. Those odds have dropped significantly when we got back above the 200s and will remain low. I'd still put it somewhere maybe just north of 50%, but favorable but not high anymore. We get down back below the 200s, they're going to shoot back up high again, 70, 80+%. That hasn't happened. We're not even close. That's not going to happen today, right? So we'll see next week, and then I'll address it if and when it happens. What I do not like, and this is just me doing this many years, my read on the chart, the posture of the PPO right now. When I look at it, see how the lines are flattening there, and this is negative divergence. This line I have drawn right here and this one. And that was the recent divergent high I mentioned, right? I prefer, and sometimes that does the trick, that type of divergence, but I much prefer when you have clean separation. I'm going to draw it out here. And so should we rally up, and also look at this purple line. I've had this here for quite a while here, created back in, I actually moved it. I move it from time to time. Last moved, look at that, 2020. I've had that line there for 5 years. That's my trend delineator on the PPO. In other words, you can see here, when the PPO, I use a signal line, which is the white line, the last of the two to cross. That way it avoids whipsaws like this. And it's very simple and very effective. When you're above the zero line, the trend is bullish. And when you're below the zero line, again, that 9 EMA, the trend is bearish. you could trade that alone and you beat the shit out of the market just doing that. You'll be in and out more often. There's some whipsaws, but then take it religiously. Take that whipsaw there. You would have flipped back, but then you would have immediately got back short again, and you would have caught all that. But by the time it flipped here, so I use it in conjunction with other things. However, again, it does a pretty good job. You can see I haven't tweaked it in 5 years. And, other than some brief whipsaws, it not only delineates the trend, meaning bullish when the signal line's above, bearish when it's below, but it often acts as support. Again, that white line, the last of the two to cross, when tested from above, or resistance when tested from below, like right here, after that rejection. Right there, support. And so right now we're coming up on it. And if this market can punch on through here and make a marginal new high, that's all I suspect it will be, but we're going to get close to the previous highs if that happens. But so watch for this. And it's, again, something to watch for. Wouldn't surprise me. Right now, it's not my preferred option. I think there's a good chance we're going to go down. We're going to hit T2 and could go quite. I think there's a decent chance that this marks the end of the bear market rally. And I say that too because we get much further away from the 200s. We're already past where I wanted to see them go, up to 500 on QQQ. Percentage-wise, we're not that far. We're at 508. What is that percentage term? There's 500 right there. Right about there. I'm just going to grab it. So, I mean, we're 1.5% above the top of my bounce target zone. So, again, it's not too far, and we got a little higher before. All right, so again, something to watch for most likely next week if this market can rally. And then we'll have that clean separation between the peaks, right, and the indicators. However, again, I've seen it where you had this type of divergence, that flattish divergence, and that worked. What I put a bigger weighting on, guys, is this, support. T2, and then the bottom of the gap, by the way, if technically there's the bottom of the gap just below my T2. If I see a reaction high just above a gap, that's why I set that second price target there. And this is what I still favor. And part of that, again, goes into this is the fact that the 3-day weekend's coming up. And now the tiger is back, right? Trump's back doing his usual huffing his chest and saying, you can read what he tweeted out today. Or I can do it for you right now. Let me do this on another thing here. 1 second. Here it is from his Truth Social. I have long ago informed Tim Cook of Apple that I expect that their iPhones will be sold in the United States of America and will be manufactured and built in the U.S., not India or any place else. If that is not the case, a tariff of at least 25% must be paid by Apple to the U.S. So that went out today. And again, the technicals are already pricing in the drop. That was just the catalyst that kind of got it moving down to hit our first target, where we had a reaction, as often is the case, upon the initial tag. And the next one was the European Union, the EU, which was formed for the primary purpose of taking advantage of the U.S. on trade, has been very difficult to deal with. Their powerful trade barriers, VAT taxes, ridiculous corporate penalties, non-monetary trade barriers, monetary manipulations, unfair and unjustified lawsuits against American companies, and more have led to a trade deficit with the U.S. of more than $250 million a year, a number which is totally unacceptable. Our discussions with them are going nowhere. Therefore, I'm recommending a straight 50% tariff on the EU starting June 1st. There is no tariff if the product is built or manufactured in the U.S., blah, blah, blah. All right, I just want to share that. So again, going back to my, the scorpion, the frog, another fable, or one of Aesop's fables that you're all familiar with, the boy who cried wolf. That's what Trump has become, in my opinion. He's becoming more of a eunuch, in my opinion, because he keeps cowing down and cowed down before, as expected. Like I said, there's no way in I put the probability at near zero that the two world's largest economies were going to continue on with 150% tariffs against each other. It wasn't going to happen. So, and nor is what he just threatened on Europe. Everyone's starting to see through him now, throw out these crazy numbers, huff his chest, and then come in and get things done. So what I'm getting at is the market's probably going to start to dismiss more of his kind of loud rhetoric as just for what it is. And, ultimately he does wield some power. So let's let's not, say it should be completely dismissed. Yeah, and speaking of DJT, Trump media, this is where his go-to platform. And back here somewhere, I threw that out as a trade idea to you. Told you I even took some because it, again, like him, don't like him. That's where the news is coming from, and he's using this platform, and so it's been testing the 200-day moving averages. If it can punch up there, it's probably going to continue to run. Remember, came in, put off that divergent low recently, and it's been consolidating lately. I just want to bring that up. It's also, especially for those of you longer-term bullish looking for trade ideas. I think that was a couple months back that I highlighted that one. Okay, before I move away from indexes, let me just show you all of them. That's QQQ, first target hit this morning. SPY, I gave it to you on this board here, and that was these were the levels. And you can see SPY now is below. I have that pre-market trades turned on just to show how low it went this morning. Dipped into the gap this morning, and I'll turn these pre-market trades off in a second, but you can see right now we're holding that gap support. So remember, this is why I watch both SPY and QQQ. This is a great example. If you were a SPY trader and you were only watching SPY in a vacuum this morning, you might have shorted or added to your short or not covered because SPY was in the gap. It had dropped down into the gap. But at the same very time, QQQ was back testing the top of its gap. And so the QQQ traders bought. And it doesn't matter. It's a chicken and an egg thing here. It doesn't matter which one came first because there's a subset of traders that trade the Qs primarily like me, and there's another subset that trade the S&P 500. But the thing is, they have the same top holdings. And so when money flows into one or the other or out, they move in the same direction. QQQ just goes up and down a little more in percentage terms because the higher beta stocks in there, more tech stocks. That's it. So there's an example where SPY is defending, briefly dipped in the pre-market, but currently holding gap support right now, but also below that trend line. And then IWM, I gave you also nice move down this morning right to, these are the same targets I gave you the other day. And that's effectively a hit of my 196 target right there, as I referred to. Very good support level. So again, if you're an active trader, you would have, shorted this here. I mentioned it many times in this trading range, and then the trend line, an objective short at resistance, the downtrend line, which again, this is the downtrend line, the primary downtrend line off the highs in IWM. This has been covered recently. So objective to short at resistance, meaning the downtrend line, and then also an objective short on a break of the uptrend line, and then also an objective short on the break of the recent trading range. All three of those were highlighted. And so if you shorted the push up to the downtrend line, which is right about here, you made a quick 6%, biggest drop in the small caps in many months, really since back here. And that was a very objective level to book profits, game the bounce. And where did it bounce to? Right back to resistance. So these, again, the same levels I've had on here. And so you could recycle back in, or you have this bottom of this range. If we happen to carry up a little higher, that will be resistance. Or if we go even a little more than that, you still have the downtrend line, which we've already been rejected off of. My guess, we're probably not going to get back to the trend line because if we do, we'll probably punch it. Usually you get this going here, and that's it. And that gives you your opportunity to really exit, or get back into swing shorts if the bear market is going to resume in IWM. Again, I'm have to toggle over to the daily chart and show you what I'm talking about. That's the primary downtrend line right there. So that was it. It was also reject. Oh yeah, and it was also a rejection off the 200-day exponential moving average, a perfect rejection after a week of trying to get through there. So there was about every reason in the world to short the smallies there. And again, maybe it's going to break on through there. You made 6%, take the money and run if you're a short-term trader, or if you're a longer-term trader and you're holding out for the prize. Well, the prize, you can go to my weekly target charts, and there's still a tremendous amount of downside left in the small caps if my longer-term outlook's correct. Okay, back to the 60s. I'm going to turn off the lines here. Well, I can leave them on. Well, just let me show you what I see in the big cap stocks, the Mag 7. Not all of them, just a handful here. Microsoft, also has that divergence like that, that if it were to push up anytime soon, I'm just drawing it out here for you, another marginal new high would have even bigger divergence. So that's about the only guarantee I can give you right now, guys. If this was it, and we punch up, make a new high, and even this speaks to this current trade. If you want to ride this one out, holding out for T2, you'll go underwater if you didn't cover at T1 any or all of it. And my guess is, and we might not even, I gave you a suggested stop on that trade when I threw it out on Tuesday. And that one, it's going to get close to that. It could slightly clip it. You'll have to decide if you want to modify your stop at all. Again, or not. We don't have to have that bounce. But if we do, like I said, I just want to share my thoughts that it will give us even bigger divergence, still increasing the odds of a drop, even a bigger drop. Typically, the larger the divergence on a trade, on a security, the bigger the ensuing trend change, but not always. There's a lot of variables. This is a 60-minute chart. Remember, this was just a little divergent low only on the RSI and had this big move here, but there were many other reasons as we were back there covering our shorts and going into only long positions back on the August 7th lows, April 7th. All right, a couple more I just wanted to cover because this is how I analyze the charts. I look at everything. So here's NVIDIA. Let me turn off these pre-market trades now. Let me do that. There we go. So NVIDIA is now just cracked below a nice trend line here. And it did so after this was a divergent high right there. Divergent high, just like we had a big divergent low there. Just like we had a divergent high there, divergent low there. I've had and posted most of these trades on the site of Field Day Trading this one. And this is one of my favorite longer term short positions. But like everything else, if this proves to be a whipsaw, and that's why I'm going over these mag top, it looks just like QQQ. Again, it has that flattish divergence there. So should it go up, punch through, and next week make a high over these previous highs? Again, if it happens next week, it is guaranteed to be a divergent high. Why? Because these indicators are lagging to the point they will not. Again, if we go up 20%, 15%, yeah, it's going to take the divergence out. But again, a marginal new high, relatively slight over that previous high will still be a divergent high. And you can also see the trend indicator on NVIDIA is the zero line. I'm talking about the PPO down here. It's just a bang up, it goes into my analysis. And this right now, we're in an uptrend. So they're buying the dip. We're above the 200s. They're going to buy the dips like they did this morning. Again, I think this one will get sold out into the close today for the reasons I stated. This right here, since this point with a white line cross said the trend was bullish, you had a little small bear trend there, a little bull rally right there, bear. Again, this just does a great job, and we're right on that line now. So should this breakdown stick, that's a pretty clean trend line right there, right? Pretty clean uptrend line on the 60, and it is a breakdown. And like I always say, support is support until it's broken, and now if it's broken, that becomes resistance. So any back test would offer an objective short entry. If this breakdown sticks and NVIDIA starts to get some downside traction, you're going to cross. PPO line is going to cross below there, signaling the first bear trend since here. First crossover, that was the previous one, and the one before that. And you can see what happened on each of those signals right there. So that one wasn't much, but we'd already put in a much bigger divergent low. That's why I take everything kind of bigger picture. I don't trade any of these one indicators in a vacuum by themselves. I look at it with the bigger picture. And again, as you know, back then I was only long and bullish, so that, even though that was a pullback to be bought because we had a lot more upside to go on my bounce targets off the April 7th low. All right, a couple more. Apple, obviously, in Trump's crosshairs this morning, as I just read to you. A little symmetrical triangle pattern, and it broke to the downside. That is a sell signal. You have a reaction low. Traders love those reaction lows. If that's taken out, that's so far where they bought Apple. Support at 190, and then Apple gets pretty thin below there. What am I talking about? Okay, here's what I'm talking about. And this is a big, this is still one of, if not the most important stocks out there. Nvidia might be the most important now because it's the poster child of the AI bubble, but my volume of price histogram, you don't even need to turn that on. You can kind of see where the trades have been lately. You can see in recent months, it shows you where the trades are, how much volumes occurred at each price level. And you can see it gets really thin below that 190.55 support I have. In other words, very few people bought here. It was a brief drop down followed by a reversal. You see a lot of folks have been in this trading range. And so this is where the stops are right now on Apple bulls. A lot of stops below that line. It's not a one level, it's incremental. But each tick we go down below 190.55 is going to be bearish for Apple. And then, God forbid, it takes out those recent lows. You're going to hear about it. The market's going to not like that. Now, we're above there. There's support. So if you're a bull, and I know just a couple days ago when we were, at multi-week highs, a lot of bulls came out of the woodwork. One of them we heard from back here when, it was time to go long, cover shorts and go long. But with that being said, look, this market it could go to new highs, or it can at least punch out and go up next week. So what I'm doing, and I always do, the same targets, when I get bearish, and I give you, for example, the pullback targets on QQQ like we just hit today, if you're a bull, that's fine. I always encourage feedback on the side. I especially differing opinions other than my own, because God knows I'm not always going to be right. I'm going to be wrong a lot. That's the only guarantee I give you. And so if that's the case, take those same pullback targets, and you should be buying the dip. Because I heard last week there must have been a half dozen or so that said this market's just going to keep going up, buy the dip. And so you just had the biggest dip in months. If you didn't buy T1 today, then I don't know what you're doing, again. And so here's Apple. I'm showing you a really good support level on Apple. Same story. If you like Apple, you buy it here. And then you buy it again if it breaks above the downtrend line. You're buying, this one's severely lagging. If I've noticed, if you haven't noticed, severely lagging the rest of the tech sector. And that's, again, this is Apple. It was until recently, over the last decade, has consistently, right now it's not, but it's the majority of the time been the biggest, the world's largest publicly traded company. It was the first to hit the $3 trillion mark. I think it was the first to hit the trillion. And so you can see this is, we'll call it a red flag, maybe a yellow flag for the market, and one to watch. So there's the levels to watch. Again, maybe it's just having a little tough time right now. And if the market goes to new highs, then I guarantee you they're going to come in and buy Apple. You're not going to see Apple continue to do this if the rest of the Mag 8 do this up here. So there's Apple for you. There's the levels to watch on how to trade it. Coming up on support. There's Amazon, just broke uptrend line support right here. Coming up on that gap right there. I should move that line right there as the bottom of the gap if they want to backfill that. There's Alphabet with this bearish rising wedge pattern. Nice looking setup here. This is a 60-minute chart, of course, I'm on. Look at that uptrend line, wedge, negative divergence. Break of the wedge would be your sell signal. And Meta, would I not have Meta marked up here? Nah, Meta's maybe, a lot of these things have these uptrend lines off the lows, which have been cracked. Again, that was what I've been waiting for. See the indexes in the top sectors of the S&P, as I've covered recently as yesterday. Most of those are broken down. This is the comparable uptrend line on Meta. Yeah, I already gave it to you on the daily. There it is. So that's it. So these were pretty powerful sell signals. Some that potentially have the potential to take the indexes and these key stocks down below the 200s. But right now there's a comfortable cushion there. So the dip buyers are going to do their thing unless the 200s get taken out. That's when you'll see the stop start to get hit and less interest in dip buyers coming in. The machines, the algos will turn to instead of buy the dip mode they're in now, they'll start to go to sell the rips if the markets get back below the 200-day moving averages, both SPY and QQQ right there. Somebody asked me for my price targets or update on the VIX. So yesterday I said nothing's changed. This is where we went long the VIX, just like we went long there before the wedges even broke out. Hit my final price target right there to the button. The initial price target gave third and final price target almost exactly. That was a phenomenal call. T1 hit, pull back into the buyback scaling zone, the purple box. T2 hit, scale back in zone here. I told you recently, I've been updating this one quite a bit. We had price support just below it, kind of like QQQ had the $500 level, resistance just slightly above my scale back in zone there. And again, that's by design. Like I told you, I didn't scale. I stopped shorting when I wouldn't short above the 200-day moving averages. I sat tight with what I had, other than scaling out 1/4 of that, and it was still a fractional position. I wouldn't add fully until we reversed and went back down through the zones. We still haven't done that. Same thing with the VIX. So that was yesterday, and this is, if you take these trades, even if you game part, even if you didn't even game any of the pullbacks, which said you could short, and that's what I do. I like to short when I'm, especially the VIX, when expect to bounce in the market, which of course I did in early April. If you gamed any or all of this, your returns are well into the triple digits. If this plays out, and there's no guarantee it will, and that was again yesterday, there's a lot of meat on the bone to the VIX trade, and that's going to entail, as I said and I've stated, to make this target get hit or anywhere near there, we're going to have to go out and cut back down below the 200s, cut back below the the scale back in zones. So that was yesterday. Here's VIXY now, continuing to move up. Remember, this was T1 back here. It was hit, and we have reversed as expected off the initial tag. And now there's a big old gap, and we just backfilled that gap today. And so if the counter trend rally in the market is over, and we're going to take another leg down to my deeper targets, long-term targets, there is a lot of meat on the bone. And I frame every trade in an RR perspective. We're back in the scaling zone now. It's up to you. Again, it's aggressive right now for with the markets above the 200-day moving averages. So again, that's why it's a scaling zone. It has been. It's not an all-in moment. But once we take out the 200s, we're probably going to be, the VIX is going to start moving up before that, and you're going to be chasing it at a much higher price. So either way, we're back into the scaling zone there. We're still a little bit above it on QQQ, of course, and SPY. But just wanted to mention, so far so good, because here's that uptrend line I talked about that we hit recently as well on the VIX, and it's starting to move up today. So that's it. So no change in the longer term outlook. Again, it meshes with the longer term outlook for the stock market. There's that uptrend line right there I highlighted recently, and so far a nice move off it. There's the gap backfill. So this would coincide. Now again, this is not mere coincidence. See this gap right here? Okay, remember what QQQ did today? QQQ also backfilled, tested the top of this gap. And it was in pre-market, so you don't see it now because I turned off my pre-market trade. So that's it. So if QQQ enters a gap and backfills it, which I suspect it still will, that's why we still have T2 down here. Trend line is going to come in a little bit above it, but then this is how it works. Again, they're paired trades. It's to be long the VIX, is to be short. Then VIX is going to take out the top of that gap right here. Let me turn back on the lines right there. Let me put that gap where it should be. There's the, I just now moved the one of the previous targets, but there's the gap. And so, boom, if QQQ and SPY take out those gaps and backfill them, VIX is going to pop up through here and run up. I'll have to adjust these targets, probably run up to about this level right here, 65.44 before, by the time they're backfilled. And a quick update on the SOXX trade. SOXX is, put back on as a long-term. It's really one of the same. It's been a long-term swing trade. This was just, what is today? This is so about 10, 11 days ago. These were old charts right here, longer-term targets that I was giving you on SOXX, including these 6. So on the April 7th lows, when we were covering shorts going long, I also cited that SOXX hit the 6th and final target and was likely to bounce. And this would be a objective short entry up here to the downtrend line. I even gave you a scale-in zone. There it is to sharpen my pencil right here. It's your scale-in zone for SOXX. Again, that was a couple weeks ago, not even. And let me update SOXX because I still very much like that one long term. If my longer term outlook is correct, you're going to have more meat for your bone than shorting the indexes. So there was it. We got about halfway up into my scale-in zone, and since then, SOXX has dropped. The semis have dropped about 7% from there. Also rejected off the 200 after a brief, again, it's very common to briefly take out the 200. Sometimes, up for a week or so. This looks like what I think QQQ is going to end up looking like. There's about a week above the 200 days, comfortably above it. Fell back below, tried to take him out again, did it for a couple days, rejected, and when it became clear it was this level that had to be taken out, that support level, that was a major sell signal because the 200s were then clearly lost. We weren't dancing around on them. And then we back tested, rejected, had that big drop, and again, everything, all shorts were to be covered, and at least in my book, as I stated on the April 7th, only longs, and that's it. So boom, right back to the 200. Nice rejection. It started slow and then starting to build some momentum. We're in no man's land right now. What does that mean? No man's land is what I call, it's like playing the tennis court. If you play tennis, you either play the net or you play back. No man's land in the middle of the court, because somebody can lob a shot over your head, you can't get back and get it, or they can do a little drop shot over the net. So you either rush the net or play back, and that's the same thing in trading when you're between support and resistance. You're in the middle of a gap here. That's no man's land between support and resistance. Resistance being the top of the gap and support being the bottom. So if we get a decent bounce today or into next week, any backfill or any test of the top of the gap now that we've entered it, because gaps usually once entered are typically backfilled. So we can either bounce back up and then move down, or we just continue on down, backfill the gap. And as in that setup I gave you from a few weeks ago, you could see that was my first target, right? Backfill the gap. That's what the arrow breaks are for. And then, the trade just resumes. I gave you some longer term targets. Anyways, this is kind of the arrow breaks right now, our current targets. And you can see how the arrows go. At first it would be, they're going to come in and buy it there. Then they'll buy it there. And you can see how the arrows start to get longer. That's how, if I'm correct on this, and we lose, and the market indexes lose, fall back below the 200s, the selling is going to begin to accelerate at first. It'll get a little bumpy. Dip buyers, like Pavlov's dogs, are going to salivate when the bell rings. They're going to buy the dips. But once the 200s are taken out, fewer and fewer are going to do that. More and more stops will get hit. And then you'll start to get that quick kind of selling where if you're not already short, you're going to miss it. It's going to be fast. Okay, last but not least, somebody asked about crypto, and as I said, I was going to cover it anyways. This is Bitcoin, not to sound like Trump, but just a beautiful uptrend line right there. Just look how many reactions on that trend line right there. And big negative divergence, right? So that's it. We're in an uptrend with a sell signal to come on a break of that trend line. You can see this is the first support level, more of a support zone. Have a reaction there, go down there. Either way, that's a nice looking setup. That's BTC, the actual crypto, trades on the Paxos exchange, or Bitcoin, or maybe that's BTC right there. Yeah, there's BTC. This is BRR. Yeah, I was covering BTC. BRR, these are both 120-minute charts, meaning 2-hour candlesticks. Same thing, nice clean up trend line here on Bitcoin futures with divergent high. I don't have it labeled as such, but you can see the negative divergence, just like we had positive divergence there. Remember, we were short crypto coming into that, and then right around the leading up to and shortly thereafter the August 7th lows, I put out Bitcoin, and both Bitcoin and Ethereum is alongside trade ideas. My convictions aren't on Ethereum as high right now, but Bitcoin, this is just a beautiful setup right there. Again, that's and here's what it looks like on the IBIT. And again, nice clean up trend line. IBIT is just one of the more liquid popular Bitcoin ETFs. Watch for a high-level bearish PPO crossover. We don't have one yet. That's what happened right here. And we went a little higher, but we stayed below. We tried to cross, got rejected. That was a divergent high. You could see the negative divergence got bigger and bigger, led us down here, and then we set up with this beautiful bullish falling wedge. That's why we went long crypto down here. And wish I could tell you I stayed long the whole time. Didn't. Even took a couple shots on shorts and stopped out. But I was, kind of shorting into resistance. Versus right now we have a nice uptrend line, a support level, which is even a higher probability sell signal when we get that. And it'll also be a breakout, failed breakout to new highs if that happens. But again, we don't have the sell signal yet. It's in an uptrend with 0 sell signals, but there it is. If you want to replicate on the 60-minute chart, just take a trend line off the lows, set an alert, and we'll see. Okay, 45 minutes, a lot of stuff covered. Kind of the big stuff. Again, I'll get to everything else. I'll probably do one more video today, maybe before I wrap up, or if I see anything that stands out. My thoughts here on the market, on crypto, on the semis, and again, key levels to watch. Like I said, it's anybody's game right now. Rest of today and into next week. But again, we've got some nice support levels below to watch, that if taken out, especially on crypto here, could trigger the next drop. And same thing with equity markets. So, all right, you guys have all my thoughts and the levels to watch. Let me get the video out to you, and I'll see what else I can find today. This has been Randy Finney with Right Side of the Chart. Have a good one.